You are listening to episode 1 of The Informed Investor, Investor Educational Initiative by Research and Ranking.
Hello everyone, it feels great to welcome you for the first episode of The Informed Investor. My name is Jigna Shah, your host for the series, and I am in conversation with Jaspreet Singh Arora, Chief Investment Officer at Research and Ranking. Hi Jaspreet, there is a lot of noise from all the four corners of the country, and also COVID cases are rising day by day. Considering the gloom and doom in an economy, how do you forecast the growth of the Indian economy from here on?
We are no longer talking of a lock 4.0 or 5.0 or even an unlock 1.0. We are in fact now at a state level talking of unlock 2.0 and so on and so forth. In terms of the stock market, what we saw was the March was very, very had seen a very steep and sharp correction of 23%. April was a good bounce back of 15%, and this is all at the Nifty level. May was more or less flattish. We were minus 3%, and June was plus 8%. What it means is, from where it started till end of June, we are down about 15 odd percent. While some of the other global markets like a Dow Jones, S&P, they are much better off, and therefore this is a gap or a catch up that can happen. And so there's some sectors which are doing better, like in FMCG, telecom, agri, pharma. While there are some of those discretionary like hotels, entertainment, aviation, which are not doing as much as well as the other. But what's clear, that the GDP is going to be negative for this year. It's expected to be negative 5%, but at the same time, it's expected to bounce back equally sharp next year, which is FY22. If I look at the IMF forecast, they are expecting the global economy to contract 5% in current calendar year, out of which the advanced economies could contract by 8% and the emerging markets by 3%. And all of them should bounce back equally sharply next calendar year. That's what a global agency like IMF is talking of. There were these recent events that may have looked jittery. When the fight on the border kind of escalated and it looked like we might go into another not so great situation like we had about a year back, and then even a year from before that with Pakistan. But thankfully the skirmish with China has settled down. The coronavirus cases obviously keeps on rising, but the good part is the fatality rate is very, very low. The GST collections you would have seen in the month of June was 90,000 plus crores. You might say it's lower than the 1 lakh crore per month average. But if you put in context that April was 32,000 crores, May was 62,000 crores, it's a very, very healthy number. And hopefully in July we could even better this number. Compared to 90,900 crores in June, and FI and DI were net buyers in the month of June after heavy selling that we have seen in the previous months of like March and April. So there are silver linings that one also needs to keep into account, like the rural India is really blossoming. You have a good Rabi harvesting, which is now followed by a good Kharif sowing. The average rainfall is for this calendar year is expected to be very healthy, far higher than the average. And this is a third consecutive year we are seeing that, right? So all that bodes well for the rural economy. The core sector growth is seeing improvement on all areas: steel production, cement production, fertilizers, crude. All of the parameters you see there is positive news. the when you look at oil, it had corrected significantly and has now settled. And lower crude prices obviously helps India as much as 1% of the GDP. And there is fair bit of appetite for quality offerings like from Reliance, from HUL, HDFC Life, Bharti, Kotak. Many of these had offered billions of dollars and they were lapped up by quality FI names. So amidst all this gloom and doom, there is good news also happening, which one tends to forget.
This is good, but how are the next 2 months shaping up? And if we look from a sectoral standpoint, how are things looking ahead?
So to answer that, June, end of June and early July, we have seen the two-wheeler sales being around 75%, up to 75% of what they were in the similar period last year. So if they were doing 100 units of sales in June end or July early last year, we are all India level, we're selling at about 75 units. And this is increasing week after week. The four-wheelers is obviously lesser. Four-wheeler sales are 50%. The tractor sales are more than 100%. So tractors are in fact seeing good growth backed by this rural growth and the monsoon factor that I just discussed. The FMCG growth has been about 110% in urban India and 5% in rural India in the period March to June. And that rural number is low only because of logistics factor, right? And not for reasons of demand. With now logistics improving and supply chain being as close to normal, the gap between rural and urban will not be there as much. Similarly, paints 75%, insurance 75%, consumer durables 85%, right? Within that, washing machines is in fact doing much higher numbers compared to what they were doing same period last year. All India sales we're talking of. Cement, steel 85%, right? And if you talk of organized jewelry, something like Titan is selling as much as 50% or more, in some case 60% of what they were selling the same period last year. So the point we're making is things on the ground is getting as close to normal as possible, and one doesn't need to be so scared that things are not rolling or there is not as much activity as it was. So it will not move from a 20 to 100. It will move 50% to 80%, and as over the next quarter or two, it will again go back to 100% of the activity.
Jaspreet, can you tell me the key events that are there on your watch list so our investors know what they should look forward to?
I think 1Q results that started with TCS, DMart, and both cases we have seen not so great results, but a reasonably good outlook, right? Both from TCS and DMart, and this kind of watch on the commentary on the outlook will be key going forward. It's not 1Q. Believe me, 1Q is a washout. People know that it's discounted. Nobody will sweat just because 1Q. I mean, imagine DMart lost. The revenue drop was 33%. The profit decline was 88%. Can you believe it? On a YY basis, but still the stock is down only 3% because it's discounted. And people know quality franchises, as long as it's selling essential products, it's got good balance sheet, right? And it's got a long rope of growth to grow for the next decade or two. Then essentially you don't need to worry too much. So that's one. The first quarter results, more on the outlook for second quarter on the balance part of the year is a keenly watched event on a stock by stock basis. Then you have those big elections in US where one will have to really keep an eye whether it's Mr. Trump or his adversary which kind of wins the election in the month of November. that will again, till then obviously it's the volatility will continue. And in India we have elections around the same time in the state of Bihar. But why we are highlighting this, even if it's a state election, it's simply because the government of India may not want to venture into any bold reforms which will derail the economy once again. Instead, it might want to do something which only uplifts it.
From the market's perspective, where exactly do you see Nifty going forward? Are we going to mirror the bottom like many believe? Is it a bull trend, or do you see Nifty being range bound at least for the next couple of months?
So what's the bottom line? Our sense is, with so much of global stimulus package being announced, there is fair bit of advancement in research on the vaccine and also the cure. I think the bottom is behind us. I mean, that's there's a fair bit of confidence when we make that statement. And in the near term, we expect the Nifty to consolidate or be range bound in the range of about 9,500 to 10,500, maybe 11,000. So maybe 9,500 to 11,000. And the moment you have the cure, a proven credible cure, and also a vaccine, this range should move to 11,000 to 12,000, based on the long term multiple of 20 to 22.
Jaspreet, one day the markets are up and another day it is down. Things are getting pretty chaotic and distracting sometimes. What would you suggest to handle this kind of volatility and stay calm?
Handle volatility. So this is another interesting subject, because there is so much happening in the market for the last couple of months, and if there's anything which is constant throughout this phase between March till date, it is volatility, right? And when I look at that subject, I remember a small story which was told to me by a colleague of mine, where which said that, and this was based on a speech that CEO of Google, Sundar Pichai, had given, where he spoke about the cockroach theory. So what he said was, there was an instance when a cockroach suddenly flew from somewhere and sat on a lady. The lady screamed out of fear and scare, and looking at her reaction, everyone else also panicked. When the lady somehow managed to push the cockroach away, it sat on another lady, who, in an attempt to push it away out of fear, then the cockroach fell to the next waiter. Now, the waiter did something different. He just observed the behavior of the cockroach, and when the time was right, he grabbed it and threw it out of the restaurant without any chaos. What essentially we're trying to highlight here is the fact that here, in this context, the cockroach is nothing but the volatility. If one is patient enough and mature enough and kind of has that a shoulder where one is willing to sit through and think about it and then react, rather than just reacting at the spur of the moment, then obviously this should not be a too big an event. But that seldom happens. So rather than responding, adapting to change, or making a plan while all this is going on, we just tend to react, and that is when the real problem happens. So that is just to put a corollary to make understand that there are times when one needs to sit back, relax, take a deep breath, and think what next to do, rather than just doing it and then thinking, oh, what did I do?
Finally, what would you recommend to investors for wealth creation? What is the secret recipe to invest successfully in the stock market?
Okay, so yeah, that's a very interesting question, Jigna. What are we recommending to our clients when we talk of that wealth creation journey? So in the current scheme of things, what we are saying is that rather than waiting on the sidelines or adopting a wait and watch approach, start nibbling in good quality stocks. and then increase your investment as and when you think the fear is almost going away. So to summarize, what essentially we are saying is to put anywhere between 35 to 40% or even 50% upfront in good quality stocks, right? While the balance can be staggered over the next 3 to 6 months, depending on the advancement that we are seeing towards availability of a vaccine and business returning to normalcy. Number 2 is just avoid getting distracted from information overload, distraction, rumors, and forwards that we keep on receiving through WhatsApp, Twitter, news channels, and number 3, very important, trying to time the market by selling now, buying later, or just waiting for that right moment, right opportunity. Believe me, it just you'll have to be really, really lucky to grab hold of that. So therefore the concept of SIP, systematic investment, right? Therefore staggered approach, right? Buying month after month, right? That's what's required. And lastly, keep a horizon of 3 to 5 years, and only invest that portion of the corpus that you wouldn't need over the next 3 to 5 years. While this may sound like a cliche, its importance can never be overstated. Always remember that our country of 137 crores, in any category you look at it, we would seem to be underpenetrated, right? And when you combine that fact with that, whenever there is a crisis and there are opportunities, and you combine the two, right, wealth creation is a given, provided you invest in quality franchises for a long term and by taking independent professional advice.
This reminds me of one of my favorite quotes from Robert Kiyosaki, which says that it's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. With this, we have come to the end of the episode. Thank you so much, Jaspreet, for your timeless and valuable inputs. I look forward to our next discussion.
Thank you, Jigna. Look forward to our next conversation. Goodbye.
Equity investments are subject to market risks. Read all documents carefully before investing. The views expressed are for information purposes only and does not try to predict the market. Research and ranking is not responsible for any actions taken by you based on this information or views. All the views expressed here may or may not reflect Research and Ranking's recommended portfolio.